Good evening, traders. So today I'm going to be talking about when it is an appropriate time to size up your trades to earn maximum profit. Now, I don't condone that everyone full ports their account or simply goes higher than what they're comfortable with, but in today's session, I believe it's kind of important to talk about when you should increase your size. Now, there's many different factors. Everyone is different in terms of how they manage their risk, and this requires a lot of due diligence whenever you decide to size up your trades. It also comes down to how experienced you are dealing with these type of situations. With the STX option pricing model, we have covenants that tell us when the market is a right opportunity to size our trades. And it really comes down to finding the right opportunity by waiting and understanding the whole market dynamic structure before you actually increase your size. Increasing your size, you also have to be willing to bear the risk of being wrong. And in these circumstances, making the decision is quite difficult. So we're going to be talking about the psychological component of this, and I'm going to be talking about it in terms of how it relates to today's trades. Because in today's trades, I take in multiple positions, both on the up and the down, and later determined that I need to size up my trades in order to have a successful day. I also sized up my trade because I was very confident in certain aspects. We had a few trades that didn't end up in our favor, but because we sized up our trade, we ended up having a very successful day. So let's go into it and let's talk it in great detail. So today we seen the S&P 500 open at 53.46. The market was down significantly from yesterday's open. Sorry, yesterday's close, because the yesterday's close we were at around 56.40, and we were down approximately 100 points from that level here. The market was very close to hitting a circuit breaker on a major breakdown. So let's go over today's trades here. So we started it off the day with taking PLTR puts here. Okay, so what we had done here is we've taken PLTR puts, and the reason for this here had to do with the fact that the call premiums were very expensive. I was looking into the upside here, but the upside was looking very tough. So we decided to get into the PLTR puts here. Looking at our numbers here as well when it comes to PLTR, we've noticed that a lot of these stocks were moving towards their 200-day moving average support. So that's where PLTR comes into play. We've seen that it pretty much went to our top level here, and we were looking for a pullback to get out right here. So we decided to first take this play here as well. We also gave out MSTR puts to 245 puts here, okay? So we're doing 10 contracts on these specific plays here. Now this MSTR put did very well here, but I made a mistake with this trade by stopping out pretty early. So I stopped out of this play here when it was minus 40% because the market was pretty much transitioning at around 10:30. So at 10:30, this market was right around here, and it was very choppy. So it kept going up and down, and when it started to really break down, that's when I knew that something was going wrong. So we got out of that put, but some of the members did hold that. They went to a low of 0.78, but they ended up going to around $5. Okay, so that was an interesting thing. This Tesla call that we had, we sized heavy into this, and this didn't end up working out. This QQQ call didn't end up working out, but we ended up selling our PLTR put for 100%. So what we had done here is we started to size heavy here, okay? Because the reason why I took calls in the first place is the neutral range was right over here. I was looking to see if the market would rebound, because there was a strong pop where we went to the upper WAP here, and we didn't really break out, but it looked like the market wanted to break out. That's why I was holding calls. And in this market, you want to be in both sides, okay? Because it's very common that you could see a massive move, and we knew that Trump was talking. That's why I had the Tesla calls in case we saw a market ripper. Now, in my past videos and in my past training stuff, I normally don't take multiple positions all the way. So this was a little bit unusual for me to have multiple different ways and risk all this capital. But the market was a little bit messy starting the day. So what we did here is we loaded on our QQQ puts, the 440 puts. And we've got over 20 puts at this specific position. We knew that the market was going to go downside, so we stopped on our QQQ and Tesla puts. And we made a massive banger on our QQQ puts here. I wanted to hold this all day, but when it hit my level 2 bearish, I couldn't let this massive win from 4 to 9 on a 20 contract play go to 0. So we decided to take that out that profit, and we rolled into QQQ 420s near the end of the day. This was a roll with profits here. We were later looked into getting meta puts, which did end up filling, and we closed our day by getting these SPX 5200 puts, which gave us 300%. Okay, so we ended up closing those for 340%. So why did we size up our end of the day lotto? The fact comes down to the reality that level 2 bearish hit over here. Okay, so as per my model here, is whenever level 2 bearish hits, you always want to wait for a strong pop. And in this case, the strong pop took SPX all the way to the upper WAP right over here. And this here confirms the downside trend. So whenever you see the upper WAP or the WAP or whatever the case is, we were waiting till end of the day here because we wanted premiums to be at their absolute low. So the market ran up to around 53.20. We decided to take that put near the end of the day here, and then we drove it all the way down to the lower WAP, which ended up giving us that massive return here. So we did very well on our PLTR, on our meta puts, which we also sold for profits, and that was also a very sized up play because we knew that the downside trend was confirmed. So we sold the SPX, we sold the QQQs, and we sold the meta puts for a nice profits, which ended up in the green. The main things that we only took a L on was the QQQ calls, the Tesla calls, and we stopped on the MSTR puts. If we had held them MSTR puts, it would have been a nice trade here. But because of how the overall structure of the market is, things were certainly moving in crazy directions. One trade that you do really want to be aware of is BABA here. Okay, so with BABA, it was announced that the Trump administration is considering delisting Chinese stocks. So that's why we see an end of the day dump here as well on that particular play. And we're looking to see if that news catches wings here, because if it does, it's very likely it's going to go to $90. So there's a big risk in the Chinese names, and you guys should definitely be aware of that moving forward here. So to summarize this, and before I close it off, the market is providing a lot of opportunities. Okay, what you see here is a delusion here where you could play both sides, and a lot of our members actually played the bounce on this level 2 bearish here, because if this had break in here, then the market circuit breaker would have hit, and we would have seen our level 3 bearish hit right over here. You can see based on our war room numbers here that we had these levels given to our team before it happens. I've shown time and time again that these inflection points are solid and they work. We also gave the IWM trade that 173 at 30 cents, which ended up going more than $1 at the time we gave that trade. So members on small accounts definitely bank today, and we call that a great trade for the entire room here. So if you guys are looking to join our mentorship program to know when the trend is confirmed, because when it happens here, you have an opportunity to know that there will be a strong pop up this number here, and you know that the downside trend is there, so there's always going to be a massive pullback. You just got to wait for the right time. Using the AWAPs is your best friend in terms of finding the best opportunity to short or to go long. So that's what we always look for when it comes to trading, finding the right opportunity. And when it comes to sizing your trades, you always want to make sure that you have different variables in your model that tells you whether the market's bullish or bearish. And being below the bearish territory here, being that we hit level 2 bearish, is a primary reason why I got a lot of SPX puts near end of the day. We banked 350% on that, and we banked off the QQQ puts on this massive drop once the pop was there. So sizing is not for everyone, but in certain opportunities exist. I don't suggest that everyone size up until they understand their true nature. And because of sizing up, we turned a bad day into an amazing day, and that is a good way to really start end off your day, is letting your model work, because we rushed on those plays in the beginning, right, with Tesla and QQQ, and we didn't let MSTR cook. But overall, knowing our past mistakes gave us confidence that we need to wait for the right opportunity to play the downside when the model confirms that the trend is there. So thanks for tuning in. We hope you guys enjoyed this market recap, and we'll see you guys in the next one. And like always, let's get that money.